Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 22nd of February, 2023, just after 6:30 p.m. We saw the Fed minutes today, and I think I've come to my conclusion. My conclusion is the Fed is going to go now, and reading these notes, with the 25 basis point hike in March, probably the same identical thing in May. And if we get the data that doesn't weaken from that point on, another 25 point in June. I think 50 points is not going to happen. It would take a monster, super, beyond imagined strength report to get the Fed to do that from all the notes that I'm reading. It's steady as you go, consistent is what the note said. Now, for those of you that get my written report, I'm going to include the Fed notes tonight so you can read them on your own. But I've given my whole synopsis when I put out tonight's update. I'm going to go back now, and now I can start again approaching the market with some trade ideas. We have to be a little careful for Friday morning, the PCE number, but I have to assume it's going to be a hot number. And I have to assume all it does is keep the Fed on path for the 25-point hike that's going to happen, in my opinion, in March. It will take a world event of some type to shake the whole financial system, in my opinion, for the Fed not to go 25 basis points. Do I see 50? I don't. Not from what I read. But again, I'm open to some craziness. You never know. Russia has backed off in a little bit from saying, hey, they're suspending themselves in the treaty, but they're going to adhere to the principles of it. Okay. So somebody had some reasonable talk with Putin, probably China. They're there talking, and I wouldn't be surprised if they said, basically, we're here, we're your ally, tone it down. And that's one way to accomplish it. Do I know if China's going to give arms to Russia? That escalates everything, and there's a lot to lose for China. China will probably then get sanctioned by Europe and by the United States in a heavy manner. If that occurs, try to imagine that's another problem for the world. Well, that would put a bid into the dollar, in my opinion. People would run here for the safety of the U.S. dollar. I'm not saying war, but you just put a bigger divide. What does China have to gain by that? They already have Russia over a barrel. They're the buyer with India of their oil. They don't have to do much more. Where's Russia going to turn for help in another big country? He's got the two. He's got India to a degree. India's walking that fine line, believe me. But he certainly has China, who is in its own way an enemy of the United States. I mean, I think it's fair to say that the philosophies are so different and the way that it's working through that. That's where I think we're at, all right? I make it simple, but I do think at the end of the day, people get paid to make it complicated, so they get paid a lot of money. But when you think about where you're at, that's it. What does China have to gain by giving the arms? Could they? Of course. Is it stupid? Yeah. In straight out words, it would be a pretty stupid move. What do they gain? You haven't explained to me that, other than their big trade partner, Europe, going to get on fire from it. Do they need that? Do they need another problem? No. So when I look at the S&P, it wouldn't surprise me if you want to come down in this market and fall back to 39.81 before all is said and done. Why not? The market's got momentum to the downside. There's a weekly chart of closes. You're down nearly, 1 3/4%, a little more than that. You could be headed there to see what the support is like. When we take a look at the chart here, I think it's safe to say a trade top is in place, and I don't see anything right now to kick the market over that high. It would have to come something I don't see out there, but I see a Fed that is going to go 25, 25, 25 until they don't have to go 25. And I think at a minimum, they'll require 3 or 4 months of data to see if they ever pivot. Okay, so let's assume that they go through June. I understand people saying, well, that could mean a winter pivot. It could, but what makes you think they're going to stop in June? And I'm giving you my earliest time frame. They'll still measure the data. If it's like it is, it's like watching paint dry. Portions of it are sticky and they're not falling. And yes, housing's had its problems. You don't see that in the service labor market. And I've got to tell you, come spring and summer, do you honestly think there's less demand for people in the service sector? Every restaurant I go to in Chicago, it's freezing right now. They're all going to open again. There are going to be more staff. The people gear up with more staff. Summer camps aren't open. Lawn people aren't there. Trades are not building houses in the way they do in the spring, summer, and fall. That's what's going to happen. So that's the sticky part that I still see happening. When I take a look at the micro mini S&P on the way down, the swing line is bearish. The market's coming into the first major support again, the 200 week average of closes. Now, it got over it, as you can see, in January. It just got under it the past 5 days, so to speak, 4 days. And so it wouldn't be surprised if you want to challenge that in the 100-day. And, of course, you're already challenging the Bollinger Band. That's why I'm saying maybe there's some downside. But do I get overly bearish when you're under a Bollinger Band? No, I don't get bullish. I just think that it sort of shuts off the professional money from wanting to sell under it. They'll sell the rally to drive it lower and hope the band keeps pointing lower to take advantage of it. Plus, you're oversold. That's where I'm at on it. In the NASDAQ, it's the same picture. You're back to challenging the 200-day average. So you got over it at the beginning of February. Now you just got back under the 18-day average. 1, 2, 3. Today's the 4th day. But this is the first retest of that 200. All right, that's important. The market's got to either say, hey, I love that 200. I'm going to buy it because I think the market's staying bullish, or it caves in from there and then you start another leg to the downside. That's what it has to decide. You've got the same story in the Dow Jones. You're in a downtrend. Now, what the market did do, and we have to take a look at this really hard. I'm going to walk you with it. Here is a market yesterday, not today, that closed underneath the Bollinger Band and in the very bottom quadrant of the day. Today, if you take a look, the market closed at 33,079. That was over this by about 50 points. It's certainly, I think it's in the bottom quadrant. I haven't divided it by 4, but if it is, it means until you get back over this high, the market's in a breakout to the downside. I will do the math. I didn't do it. I'm just busy right now, and I'll get it done before tonight. But it just tells me how aggressive I want to be on rallies back up. Do I want to sell a break where you're oversold? The one thing you'll find is I'm consistent. No. I don't like selling oversold, or overbought markets. I love to sell embedded markets, and I like to just trade the markets that are neither overbought, oversold, or embedded, though those are the trade affairs. You're not in a trade affair here. You're in a bear market that's oversold. It either embeds or it corrects a bit for you to get plays off. The same thing in the Russell. You're coming down here instead of the main moving averages the way you did in all the other indices. You're fighting at the Bollinger Band, but the trend is clearly down. Will the market embed? You're nowhere near it. So it's oversold. I think the pros are taking some money off the table there, but I don't think they're turning bullish. In the T-bond market, well, this is certainly still bearish action, but is it so bearish that the market has to say, well, I think you're going to go for new lows back here? I'm not convinced that's the case. And I'm not saying it can't happen. It depends how many 25-point hikes the market does. And those hikes aren't going to be in the back end. They're going to be in the front end. I'll be looking at the 2-month, the 6-month, and the 2-year instruments. Ideally, the 6-month is like in Treasuries, a surrogate for the Fed fund rate. And I think the Fed funds rate is going up to about 5.5%. It certainly looks like that to me. Well, that'll carry this lower, but it's not the place to be short. You're better off, in my opinion, in the 10-year on sales, and you're about to get a bearish action here. This 18-day average is about to cross under the green. That's another bearish event taking place in that market. In the dollar, none of this is bearish the dollar. If the dollar is looking at a strong economy, remember what I just said, a strong economy that has to fight that with higher interest rates, that gives the dollar a bid. It would be one thing if you have an economy that's weak and you're raising inflation because you got to beat inflation and the economy's already weak, and now you start talking, they can raise it all they want, they're going to bust the hell out of the economy. You can't, in my opinion, I could be so wrong on this, but I have never seen a labor market at near all-time lows in unemployment go into a recession. Could it happen? In a split like that, give me a nuclear war. Without a nuclear war, and I'm being facetious, but I'm being, in its own way, realistic, all right? I'm not talking that's going to happen. But you need a major event for it to happen. What's that event? So what I think it is time now. And time is not going to be a Fed that decides to jump. There's outliers always on committees. You have, 19 Fed members, I believe. You've got at any point your voting members. You're always going to have an outliers or two that will say, hey, 50, others that could say nothing. We don't have anybody saying don't raise rates right now. We don't have anybody saying yet enough's enough. We could reach that. We haven't. The data is still too strong, so I think that keeps this strong, and I think it gives the euro weakness. I think other currencies fall in front of the dollar. There'll be occasional ones that can rally with it, like the Mexican peso was done recently, but that's about it. As long as you stay embedded, I think you're still going to see on the chart. Remember, I'm wearing two hats here. I have to wear a fundamental hat to explain it to you, but as a trader, when I'm writing for my trade recommendations, I'm purely a chartist. I could care less about the fundamentals. I swear to you, I'm a Jekyll and Hyde. And on that, this is just an out-and-out bear chart. Until that red line closes over 21, I think traders will just keep selling the rallies. There's a way to do it. We teach it in our enhanced Bollinger Band course. You want to take that to learn that method. In the British pound, well, are they going to back off? Is Mr. Bailey going to do as he's saying? They're wondering if they're at the point where they can do some backing off. Now, they're giving the reasons for that being energy needs didn't drive up prices as much as they thought. They are absolutely on the money. All right, it has been one of the mildest winters in Europe that they have seen in decades. Instead of the nightmare that Putin was hoping for, he got the blessing. Somebody's looking over Europe's shoulder and saying, we're going to protect you with your oil, with your gas needs, with whatever. So this has been in a downtrend. The market is, in a nature here, oversold. Any one of these numbers under 30 is oversold. So I don't think you're attracting new numbers, but you are finding support in the market temporarily at the 200-day average and resistance at the 18. In Bitcoin, the market is caught between the lower and the upper Bollinger Bands. I don't see it doing anything of interest just yet. The pattern numbers are still, one of them's over 70. Overbought, to me, doesn't attract new buying money. In the differential between Brent and WTI, even though they're both falling, the differential is staying near the recent high, which was 702 at 666. The devil's number out there. And who's supporting it? Of course. Who do you think's supporting this? China. They're the big buyer of Russian oil and others. Now, are they paying this? No, they're getting it at a hell of a discount. India, hell of a discount. Anybody that'll be Russia's friend's going to get it at a discount. And you're looking at it come down. Russia will talk tough. They're not going to keep discounting it. Okay, Putin, where are you getting your arms from? Where's that money coming from? Don't get me wrong. The people, I saw them on TV. They are behind you. I did see it. And I see the thousands in that cheering them on for when a Russia stands together, they can't be beaten. They're right. It is a proud country. Can they be beaten? He may be their biggest enemy if he keeps down this road. Peace is the way to stop all this. In any case, lower highs, lower lows, still a market that is oversold. I'll let somebody else want to own it there. I think the market's telling you it's caught temporarily between the lower band to the 18-day average. That seems to be what's going on. The weaker numbers in WTI. Remember, we have more oil coming at you. You have a strategic reserve. Get that out of the way. And between our exports and our domestic usage, I think WI can then turn. Do I think it's now? No, I think it's going to be later in the summertime, unfortunately. I don't see it for a while happening from a fundamental point of view. You're oversold. I don't think there's anything there. Gasoline falling back. I am not surprised. I really don't want to see it get under that. It won't throw out my ideas. But ideally, you have your resistance, the 18, you've got your support everywhere from the 18-day average down to the Bollinger Band, and you start carving out a spinning action where you're waiting for the summer, spring driving. In natural gas, I heard one analyst that I do respect talking $1.80. I couldn't see it. Now, what do I disagree with? Whoa, I said I can see it and I disagree. Follow me. Do you disagree with me that yesterday you still had both numbers under 20 and it had been that way for several days? Now, intra-day, it's evening. I don't know where it's going to finish. But if closes like this with the 22 reading, it would be a sign to me to be out of all shorts that the market's going to go back to the challenge of wherever the 18-day average is. If it loses it and just stays embedded, it keeps dropping and riding the Bollinger Band. Do I think it's going to break away from that number and just collapse? I do not. I think it'll ride it down. I don't think it's going to just fall under it and plunge in a vertical move and let this chase it. It's down so much, the odds don't favor that. So that's how I'm analyzing the markets right now. The stock market, a sigh of relief, but I don't think there's anything bullish about it, all right? And again, did the naysayers show up today and do a lot? No, but the market didn't get hit hard either today. That was yesterday. Today wasn't the recovery day. I'm Ira Epstein. You have a great day. Remember, you can watch my Metastock report. No. Tesla report. No. Can we watch anything here? Oh, yeah, my Walmart report. I forgot. I did this. Yesterday, when we did this, it didn't work for some of you. I'm going to repeat this. The reason it didn't work is because when we tested it, unfortunately, my IT department didn't think to test it for non-members of our website. So if you weren't a member, the system wasn't letting you, and the members never had a problem. They were able to get through everything. So I've done my Walmart report. That report will include the price counts, weekly charts, daily. Go back, try it. It will work for you. It goes off tomorrow at midnight, I believe. So it's only up for 3 business days, so be careful. It's going to disappear on you quicker than you think. If you want, you can also move your cursor up to the top here. Give it a click up there. It'll take you right where you want to go. I'm Ira Epstein. Sorry about this particular thing, and I will talk to you later.